Ladies and gentlemen, day 2 of GFF 2025, which is all about designing everyday financial experiences for 1 billion users. Before which I would quickly like to thank our Investec partner, Grow, bronze partners, WeFin Solutions, Dhan, Hitachi Payments, and BranchX as well. And let's go ahead and invite the speakers on the stage. We have with us Mr. Ashutosh Sinha, the Senior Editor of Economic Times, and he's joined by Mr. Hitesh Sethia, the Managing Director and CEO of Jio Financial Services. Could we have a huge round of applause as I invite them on stage and they take their seats and begin the discussion, ladies and gentlemen.
Good afternoon, everyone. Thank you so much, Hitesh, for taking out the time.
Pleasure to be here, Ashutosh. Pleasure to be here with this group.
So wonderful speaking at a time when the resonant word is 1 billion. Everything we're thinking of is for 1 billion people. And that makes a huge difference. We're just 1 billion consumers in India, 1 billion people you'd like to reach out to.
Absolutely.
And probably prepare the ground for the next 7 billion as well. The rest of the world, so to say?
Indeed, indeed. That should be the ambition.
That's the ambition. So thank you so much, everyone, for being a part of today's conversation. And let's start the question. What should the financial services market for that 1 billion consumers look like? What could be the pillars, so to say?
So I think, Ashutosh, 3 words come to my mind when I think about financial services for 1 billion from where we stand today, what it's going to look like in the next decade. First one is personalization. Second one is instant. Everything needs to be here and now. And third is invisible. Now, we are seeing instant, a number of use cases. Instant payment is there already. Instant credit decisions are there. Thanks to the account aggregator framework, we have instant onboarding, whether it's a mutual fund investments, whether it's opening of bank account. We see green shoots of that already, and I think that will grow at a rapid clip. When it comes to personalization, there's a lot of progress that has been made, largely on recommending the best product for a consumer. I think a lot more can be done and a lot more will be done. We do see a number of use cases that are coming up. Invisible, I think, is a very interesting concept. Now, if you think about financial services, fundamentally, it's a tertiary service. We take a mortgage to buy a home. The home is the main objective. The mortgage is a means to an end. We have a credit card in our wallet to facilitate ease of consumption, ease of spending. The consumption and spending is the main objective. The credit card is a means to an end. And therefore, I believe that financial services should get embedded in the life journey of people and therefore needs to be invisible. It's a bit like Wi-Fi. It's working when you need, and if you don't need it, it's quiet in the background. And I think these 3 factors will decide the future of financial services.
It's a very interesting analogy that you're talking of. Instantaneous, you spoke of personalized. Of course, technology has to be at the back end.
Absolutely.
So, for so many financial services companies, there are banks, there are NBFCs, there are other kinds of fintechs that are lending today. What will be the core differentiator?
I think in the coming decade, the core differentiator is going to be finance has to adapt to its customers. Customers need not adapt to finance. Let me give you a simple analogy from our day life. We all watch streaming platforms. Streaming platforms today personalized to my context. It's almost able to know what I want to watch next. My e-commerce platform, it exactly knows मेरे को क्या खरीदना है next. It is able to predict that. Our financial services apps are more or less similar today. Why should the financial services app not get personalized to me? I'll give you a simple example, Ashutosh. Today, let's say if my salary gets credited, the way my salary gets disposed from my bank account for various payments, whether it's a mortgage, whether it's school fee for my kids, and etc., is going to be very different from everybody in this room because everybody's context is different. And I believe strongly that financial services will have to adapt to the consumer's need quietly in the background, not that consumers have to adapt to the financial services that are offered by institutions. That's going to be a key differentiator.
So mass customization of sorts, which is already beyond what today we see.
Yes.
So how could AI make it different? What part of AI has to drive that?
Very good question. I think we talk about mass customization. I say this is possible when sachetization meets personalization. What I mean by that is today there's a lot of financial service products that have got sachetized. There's microcredit insurance, there is small ticket personal loans, there is pay as you go investment options that are available. These are small bite-sized products. Now, when you add a layer of intelligence, whether it's machine learning, data science, data analytics, or AI, it needs to right size the product, right price the product, and right time the product for its customers. I think that's the personalization layer. And with today's technology, I think we see enough stalls here around this hall, which are proof points enough to say that there is clear line of sight to deliver mass personalization, mass sachet-sized products at n equal to 1 scale. So that's certainly possible. And that's what I think financial institution of the future for $1 billion and a multiple of that will need to deliver.
So are we at the beginning point for that? If I may just follow up with that, where you're looking at $1 billion and also trying to imagine once you've achieved some kind of personalization for this $1 billion, possibly look at a global offering of sorts?
I think very interesting question. And clearly, India has got a few things going for it. Clearly, one is we have the trust of the financial institution, or the entire financial system, I would say, thanks to the regulatory framework that's super robust, that's amazing, and the institutions and the members of the industry which are following that. We have agility, thanks to the industry, again, the technology agility that is there. We have the digital reach. India can clearly become a model for the world because all the platforms, if you think about it carefully, Ashutosh, are built with two tenets. They are intelligent by design and they are inclusive by intent. And now once you design something which is intelligent and inclusive, it certainly can scale billion and billion plus thereafter. So India clearly is in a pole position with its regulatory framework, with data privacy norms being in place, and with the entire sector playing its role on it to set a global standard.
So very interesting. You've used the word sachetization as well as inclusivity. So with that, how do we move from inclusivity to empowerment for the people? Because really, if you have to impact that billion, that empowerment has to come beyond that inclusivity.
Yes. No, absolutely. I think it's a very, very valid point. We have to go from product providing to inclusion to empowerment. That's the spectrum. And I believe that the jump from inclusion to empowerment is going to happen by trust and by empowering people. Today, customers are not scared of technology. Customers are scared of what technology is doing and what they don't know about it. That is what customers are scared about. Now, if we end up creating a framework as private sector institution participants in the framework where customer is clearly made aware, why is this product recommended to me? Customer needs to know in human language, in simple language. Number one. Number two, what data of mine was used? Do I have the power to actually see what data has been used? Can I withdraw the consent? In fact, I would say that giving consent should be easy, certainly. Withdrawing consent should be made easier for customers. That's when confidence in the system will come, and that's when people will get empowered to embrace financial services the way it should be, simple, intelligent, and in the background. So I think trust is going to be a key factor.
And also the innovation in product line, in services that come with it. How can that help in kind of providing access to the masses? And we're talking of masses, some of whom may not be very conversant with the English or even the relatively smaller languages. Hindi is still a very big language.
So I think, Ashutosh, if you look, India has created or scripted its own playbook. Look at UPI. I mean, no one 15 years back or even 10 years back would have thought UPI is a technology that...
अभी तो 10 साल नहीं हुआ UPI के.
अभी 10 साल ही हुआ है. It's simple in the front end. The back end is as complex. And some of us who deal in the industry know that the back end is not so simple. It has got multiple players, everything orchestrating in milliseconds, microseconds, and making the payment easy. Customers are never scared of technology. Customers are never scared of new products. Customers just need transparency. Customers need simplicity, and customers need to know what they are getting into. I go back to my point, why is certain thing recommended to me and what is in it for me? I think we have to quantify that also. Today you look at e-commerce websites or shopping sites which clearly say, you saved so much money, you saved so much over a certain period of time. In financial services, the metric that is going to become relevant to the customer in very simple terms is how much money did I save, or how much money did I earn, and how much time did I save. If we can simplify everything to this level, I think customers will embrace innovation, customers will embrace new products, customers will embrace new channels, will embrace new everything.
And if I may just add to that question, and I'll just give a little context. We're not talking specific to Jio Financial Services because it's financial reporting time and you'd not like to get into any issues. So it's a compliance issue. So relative to Jio Financial Services, not getting into any details there. So just a sense of the kind of innovation. You give one example, but there's a lot that financial services companies can learn from other industries which have innovated their products as well as services.
So I say that the number one thing that financial services has to do is predict the needs of the customers. Today that's common, whether it's in e-commerce, whether it's in video streaming. So it has to predict the needs of the customers. It cannot wait for the customer to say, this is what I need. I think industry has to evolve there. And it's for players like us, which have capital, which have reach, which have digital prowess to take up that mantle and run with it. I think that's the first thing that has to happen. Second, build trust. Again, digital trust may seem like an oxymoron, but digital trust is fully buildable. And India has got amazing frameworks. I mean, with the DPDP or the Indian version of the GDPR coming along, I think more than a legislative requirement, it can become a cornerstone of trust. Done well, dealt with it properly, implemented in true spirit in the product journeys, it can actually become a big strength rather than what I call, quote unquote, a compliance requirement. Again, customers need to know, give the power to the customers. My data is available with the service provider for this purpose. Make it very transparent to customers. Today, by and large, I don't say everywhere, by and large, data is being used for selling, data is less used for service. I think we should start using data for serving customers, not just selling. Of course, selling is important. So that's the second point. Third, with the advent of AI, I believe that we have to create a fair system. Again, there are marketplace platforms that are available. With AI, one can set ethical guardrails to clearly say that what is fair for the customer, what is right for the customer is what needs to be sold. For example, the most expensive car insurance policy on a certain platform may not be the best one for me. The cheapest may not be the most fit for purpose. The truth is somewhere going to be in between, given my context, my situation, driving habits, etc., the city I live in, and so on and so forth. Recommend the best product, even though it may not be at that point of time commercially the most viable or the best in the best interest of the service provider. That will build trust, and over time that will generate clearly value for society and value for the enterprise which is providing the society. So I think AI, as a takeaway, I would say that AI is certainly building smarter systems. It's building faster systems. AI needs to build fairer systems, more fair systems.
So since you've mentioned about the way things could be impacted by technology, traditional banks, payment banks, which again are a very recent phenomenon, 10 years ago, or just about 10 years ago, the RBI set the standards for that. And fintechs, they are trying to create a new marketplace, driving the new financial services. Could India show the way to the world?
Absolutely, 100%. I think, as I mentioned earlier, India has got, firstly, the trust in the financial services system. Since independence, there is not a single bank failure that has happened in this country. That's amazing. I don't think many countries can be proud of that kind of a track record. It's simply superb. The second one is the technology firms provide the agility and digital reach. Now, a combination of these very rarely exist in India, and I think India can certainly provide a playbook for the world in terms of how to build trust digitally and inclusion digitally.
So the trust becomes that so important word. So how can, in tomorrow's world, that trust help in the world of technology-driven finance? Would you like to elaborate?
Yeah, absolutely. Now, just think of a normal customer's buying process. You know, the day I buy an insurance policy, there's always a feeling, did I buy the right policy? Did someone else get the same policy at a better price than me? The day I make an investment, there's always a nagging feeling in my head. Did I do the right thing? Did I make the right investment? I have the best advisor. My advisors have the best for me at their heart. But is it truly fair? Has it looked at everything around and offered me what's best? Somewhere I may not be sure. And therefore, I believe that today's technology, and I go back to the comment I made earlier on being a fair system, I think that's super vital. And once a system becomes fair, over time customers realize trust will not get delivered through marketing. Marketing will spread awareness. Trust is going to get built through actions. Again, transparency. Tell the customer why a certain product was recommended to them. Make aware to the customer very clearly what is in it for them. How much time have they saved? How much money have they saved? Basically, transparency, accountability, transparency and measurability on what is in it for me in very simple human language. I think that's going to be super vital.
So the AI drives metrics or drives on metrics. So for AI to work, traditionally the belief is the enterprise drives that. It drives the enterprise need. How can it be either driving the consumer need or at least be fair so that the consumer also stands a chance against something which is very machine-led and the individual probably in today's world or the general belief, you really don't stand a chance.
A very good point. In fact, you're so right. Today, technology and discussions we hear in forums and within our respective offices is how can technology, including AI and everything else that is more modern, how can it help the enterprise improve productivity? How can it help me reduce cost? How can it help me improve revenue? Very rarely do we talk about technology as a customer advocacy tool. And I think today, imagine if a bot or any sort of technology told me today that, you know, you could maybe delay this payment of a bill by 2 days and you pay this other bill, you could save 500 rupees in late fee, or nudge me properly to say that you can manage your money better. So I think creating those tools is certainly in the realm of possibility, and that has to be in the DNA of institutions to say that we want to create an ethical AI, a fair AI system, which is going to act at all points of time in the best interest of the customer. And over long periods of time, something that's in the best interest of the customer is certainly going to help the enterprise. So I think building that fair AI platform, which is going to provide, again, measurable, tangible outcomes for customers, will give customers the confidence. And it's certainly in the realm of possibility. It's about the intent of the institution building it that needs to be aligned at the top.
So does it need that a regulatory nudge of sorts for trust to be driven at scale? Again, since we are speaking in the context of 1 billion people, and some of them may be not as literate financially as the others. So what will it take for that trust to be built across the industry? Industry needs to sit together.
Absolutely. I think two things. We spoke about regulators, I think in India are doing an absolutely fabulous job. I mean, think about it. It's like a traffic light. We all need traffic lights so that the whole city can move safely, can move in the right direction. Certainly with the implementation of AI, we need guardrails. We need guardrails on transparency. We need guardrails on accountability. We need guardrails on customer privacy. Certainly these are all needed. And I think our regulators are on top of it. They are doing an absolutely fabulous job of balancing innovation and at the same time stability and protecting customers' interest. Industry needs to move forward from product innovation, needs to do product innovation, needs to improve productivity, because that's when real value gets added to society, because a large part of financial services is a game of financial engineering at scale, and that comes from deploying technology tools, that comes from deploying productivity measures. It must also start giving what is measurable and tangible to customer. What value am I adding to customer, and how do I communicate it? Because value seems such a nebulous term. Can it be simplified? Can it be quantified? I think that's super important, and it's doable. It's a lot of hard work, but it's very much doable. I think that's where industry needs to move.
It just reminds me, in telecom, in insurance, earlier companies had to share details with the regulator before they could launch the particular product. That has changed. Is it kind of trust that the regulators showing in the companies which are in the game? As long as the people's interest, the company's interest, and the policy interest can merge, that trust can be driven home.
I completely agree, and I think I would add one point to that, Ashutosh. It's also probably awareness of consumers. In addition to the industry has to mature. The industry is mature. Financial services, very few products today require prior approval from regulators. Perhaps the capital markets and the insurance have banking. Very few of banking products require prior approval. There are frameworks set in place. The industry is mature. But beyond industry and the service providers, I think customer awareness is super important. At the end of the day, the caveat is always buyer beware. But the buyer needs to be mature to be beware. The buyer needs to be aware so that they can be beware. And I think buyers are aware today. And that, I think, makes a huge difference. Financial literacy has gone in a significant way, and we still have a long way to go.
Let's come to the DPDP. Again, another factor of trust, because the DPDP Act, as most of you would know, is not yet implementable because the rules of business are still to be finalized, the DPDP Act 2023. So how could that be a game changer? And in the context of industry, I don't know if you can speak about it in the context of Jio Financial Services.
Yeah. No, certainly. Let's start with the premise. Trust is not optional or an add-on in financial service. It is the very foundation on which we stand. Honestly, if trust is lost, there is no place in financial services. DPDP is, at least from the draft rules and the legislation, that we can see an absolutely fantastic framework. But my own view is we should less see it as a compliance requirement and more as a tool to gain customers' trust. It needs to be embedded in the product, in the services that institutions are rolling out. And once it becomes a part of the product design, then customers start to believe in it. Again, empower. Look at account aggregator framework. I think that's a classic example. Pre-DPDP era, customers today can clearly see, I have given consent to a institution for a specific purpose for a limited period of time.
And I can withdraw it as well.
I can withdraw. I say this unequivocally. Giving consent must be easy. Withdrawing consent must be made easier for customers. Very few customers will withdraw their consent if they see value. So the hard work should not be in making the withdrawal of consent easy. The hard work should be in making value for customer, so that customer thinks that, yes, I have given my private data. What is it that I get in return? It's a bit like going to the doctor. I mean, I go to the doctor, I share my private medical history so that the doctor can cure me. There is clear quid pro quo in a positive sense that happens. I give data, I get cured. It's simple. Financial services has to be there. It's not about the fine print and getting the consents. Of course, they are very important should things go off rails in a very small segment of scenarios. But by and large, I think make it transparent to customer, empower the customer. That's super vital. And I think DPDP provides a great framework. We look forward to when it's rolled out. And I think it will add value to the entire society. So
since you mentioned account aggregator, would you like to probably mention one or two more examples of what could be some industry practices which may need to change? Would you like to mention that?
Yeah, sure. For example, I'll give you a positive example.
Sure.
Today, for example, in the mutual fund industry, a KYC done once with one asset manager is interoperable across other asset manager. Data, KYC is PII, is personal identifiable information, it's sensitive. I believe other regulators are making some attempts. I think there is way to go forward in that. That's clearly one thing that will ease friction across the entire, and it will finally reduce cost in the system, add value to customer, add value to the enterprise that's providing. I think that's one example where I can clearly think of, a step change could be done to make the system efficient. Similarly, I can think of perhaps my entire history with the financial service institution. Today, a large extent comes through the account aggregator when it comes to banks. Other parts of the financial service sector are yet to get onboarded. So parts which are not onboarded, which have, say, for example, in an insurance world, my claims history, all that actually adds a lot of value in terms of, again, right product for the right customer at the right time, at the right price. I think that's what really we should be able to drive.
That's put very simply. Now, one part of the entire framework that is still evolving is the regulation part of it. And technology is adding to the complication for the regulator. In that scenario, and in the unseen scenario, what regulation could emerge? How can industry work with the regulator and policymakers so that that trust, and I'm going back to the trust word because it's so critical, and as Hitesh you pointed out, it is super critical for the industry. How can the industry work towards growing that?
I think our regulators, as I said, Ashutosh, are already doing a fantastic job. There are sandboxes that are available. Any new regulation comes, there is always a consultation and discussion. And these are done in true spirit. And these are done at pace, yet not rushed in that sense. So there is a fine balance of making sure that everyone is heard. Ground realities are taken into account. And our regulators have also been iterating as the ecosystem evolves. So I think we have a great framework. The industry needs to sit around more if they have newer ideas with the regulators, which I believe is happening in various aspects. And there are self-regulatory bodies. AMFI is a great example. I mean, think about it. The AMFI as a body has not only interfaced with the regulators to bring the capital market to where it is, but with their whole mutual fund Sahi Hai program. They have taken it broad and deep. They have expanded the breadth and depth of the financial services, the capital market industry. Now, the next step, if you ask me, is really, again, mutual fund is great. Now everybody knows, the whole country knows. How can you actually personalize it? Whether an active fund is good for me, a passive fund is good for me, debt, hybrid, equity. And that's where I believe AI can play a role. And that's where these industry bodies will have to interface with the regulators so that we can move at pace within guardrails as a country. I think that's happening, and that should continue to happen at pace.
And it's a great example you've given. 75 lakh crore is the kind of money that the mutual fund industry manages. The campaign, Mutual Fund Sahi Hai, is now picked up by the insurance industry. If you see their campaign, they want something similar for that insurance fall by 2047.
Yes.
Again, that has to have trust as the cornerstone.
Financial services, I agree, everything is delayed gratification. When you buy an insurance, there is no instant gratification. And in insurance, of course, you hope there is no gratification mostly. In investments, there is always a delayed gratification. I invest money, I don't get returns today. And loan is almost the opposite. There is gratification only when you pay back the loan. Because we are in an industry which has got delayed gratification, and payment is perhaps one industry where you can say, I have instant gratification. I have paid now, Ashutosh has got the money now. That's probably the only one that has instant gratification. The rest of the pillars are all delayed gratification, and therefore trust becomes super important.
So one name comes to mind since we are talking so much of trust. You know, someone who's played for India, November 15th, 89 to 16th November 2013, technically 25 years. Anyone? Exactly. So Sachin could be a very good example of trust, longevity, and a whole lot more that comes with it.
Yeah.
Is that the model, or, just...
That is the model. I mean, finally, we have to have performance, which is nothing but value add to customers, and therefore you value add to shareholders. One has to really balance both. It cannot be shortchanging one for the other. It doesn't work in the long run. Investments are par for course, and that will always happen. So I think that is performance. Longevity will only come from trust. There is nothing else that will give longevity, in my view, in financial institution. Of course, other factors which are functionally relevant, like agility, deploy the right technology, make sure you have right products, etc., are par for course in any business. Same is the case with financial services. But I think over long periods of time, it's going to be trust, which is going to be the single biggest differentiating factor in addition to performance.
I love the point that you mentioned about how financial services should recede in the background and drive what is the larger goal for you. Any final thoughts on that or around that?
So I'll put it this way. My own view, financial services has to be as seamless as the Wi-Fi or electricity at your home. जब तक चलता है किसी को पता भी नहीं है कि चल रहा है. जब नहीं चलता है, hell breaks loose. I think financial services has to become number one that. Second, financial services must be as personalized as your OTT screens or as your e-commerce platform. And third, financial services must carry the trust that your neighborhood bank branch has been carrying for decades in our communities, in our societies. I think these three features will characterize what financial services has to come. And I think as a country, we are really blessed that all the ingredients are in place. We just have to connect now all of these simple, intelligent financial services as an outcome. And finally, financial services has to recede in the background. It must be just quietly doing its job because it is a tertiary service in the economy by definition. And therefore, it should do it simple, quiet, agile in the background.
Fantastic. That's a wonderful way to put it. Thank you so much, everyone, for taking out the time to be with us. Thank you.
Thank you.
Gentlemen, thank you so much. May I request you to please come together here at the center of the stage for a photograph. And thank you once again. That truly was a very, very enlightful session on designing everyday financial experiences for a billion users. And thank you so much for joining us today at the Global Fintech Fest 2025.